Hi, welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're covering new IRS rule changes that you need to be aware of for 2024, including significant penalties the IRS is about to impose and retirement contribution rule changes that affect how you save. Now, I know most of us are focused right now on getting ready to file for 2023, but what we're going to cover today is critical to know now so that you can plan and take specific actions to lower your tax bill in 2024. This is
Yep.
something you don't want to wait on. You need to know this information now. So,
Yes.
Brian, we've got a lot to cover. So, I want to first start with the IRS change that was announced a few weeks back regarding the 1099K form. They planned originally to send 1099Ks to anyone who made over $600 through platforms like PayPal, Stripe, Cash App, Venmo, and even Etsy. But they upped it again, thank goodness. Gee.
Yeah. People in third-party payment platforms were actually really ticked about the 1099 $600 threshold.
Well, just looking at the comments on our videos, I mean, people were livid.
They were furious.
Yeah, rightfully so.
So this is kind of like welcome news that for the tax year 2024, the IRS plans for a threshold of $5,000 to phase in the reporting requirements. So if you have a side hustle or you're a contractor, make sure you have all your accurate records of all your income through transactions processed through payment platforms, except for Zelle, which is not subject to this law. Start now.
Yeah.
Keep track of the gross income received and the transaction details, such as the dates, the amounts, and the customer information.
Because Brian, before we move on to the second big change, I want to ask you this question about this. This is, I mean, I don't know how many times in the last few months the IRS has changed this rule.
Yes.
So,
Third time, I believe.
right? They keep moving it all back and forth, delaying it, doing this, that, and the other. Right now, the threshold is 5,000. Do you think they're going to come back and try to lower it?
Well, let's put it this way. Why not prepare for them to do that?
Okay.
Because I can expect it to happen.
Yeah.
It's just one of those things that they'll try to do to get back to that $600 threshold. Because remember, that $600 threshold was put inside of a bill that was passed.
Yeah. Was
So
it
they
the
can
Build Back
come back
Better?
and try to go back to that in the future. So why not take our advice and start planning for this and save every piece of every receipt, every document, every
Transaction
transaction,
detail.
just save it and get prepared for it just in case. So
Oh boy. All right. Well, that's another reason. Make sure to subscribe to this channel because Brian and
yes.
I are on top of changes that are made.
Oh, this affects us
It
because
affects
many of the insurance
everybody.
companies I work with, I
Yeah.
also get a 1099 for them. So
Sure. Well, especially if they lower it to $600. I mean, that's just, it's
right.
ridiculous. Okay. Deep breath. We're going to move on to the second big change that the IRS has announced, and they've increased the interest penalty now on estimated quarterly tax underpayments to 8%. Now, this is a big increase from 3% just 2 years ago.
Yes.
And it's in effect 2024, and it's going to hurt a lot of small business owners, self-employed workers, gig economy workers if you don't start planning this now. So walk us through it.
Self-employed workers and independent contractors, including many of the gig workers out there, are going to be at risk of being hit with the underpayment penalty if they fail to pay the amount the IRS believes they owe.
Yeah.
W-2 employees who have had tax payments withheld from each one of their paychecks are not going to be affected by these changes, so don't worry about that if you get W-2. The good news for some of you is that you won't face an interest penalty for underpayment if the balance due is under $1,000 after your credits or any deduction that you may have.
All right. So we just did an in-depth video on this. If you are a gig worker, you're self-employed, you own a small business, make sure to check that out. We're going to drop that link in the description below.
Definitely.
All right. Moving on to the next change. This one is a positive change for many taxpayers because the IRS has updated tax brackets for 2024, which means that your paycheck could be slightly higher each year. So walk us through some key points on this one.
For the tax year 2024, the following marginal tax brackets applied to married couples filing jointly. Can you see it on the screen, Michelle?
Yes, I can.
Okay. I'm not going to read all this for time's sake, but this table shows you what you can expect per income bracket. For example, if you're married filing jointly and your 2024 annual taxable income is between $94,301 and $201,050, the tax owed is $10,852 plus 22% of the amount over $94,300. We're going to drop a link to a CNBC article that has this chart in it.
Yeah, we'll put that in the description below.
Definitely. Next up is are the new income tax brackets for single filers. For the tax year 2024, the following marginal tax brackets apply to single individuals. No matter how you file, though, you want to have an idea what your taxable income will be for this year. This information can assist you in estimating your tax liability and making more accurate financial plans for the coming year.
Absolutely. All right. So standard deductions are also changing. Is this correct?
They are. The standard deduction for 2024 increases to $29,200 for married couples filing jointly, up from $27,700 last year. Single filers may claim $14,600, an increase from $13,850.
All right. Thanks for that. So the next big change from the IRS is the delay in implementing a new rule regarding catch-up contribution in workplace retirement plans for high-income workers. Now, this is the second time, I believe, Brian, in a few months that they've altered this specific rule. So what do we need to know?
Yeah, you can blame this one on Congress.
Oh,
There was a drafting error in the Secure 2.0 Act that would ban all catch-up contributions in 2024.
What?
Yes. Since Congress didn't fix this in time, the IRS stepped in and fixed the glitch as if it never happened.
Wow, I did not know that.
Yes, as it was intended, this rule, which would have required catch-up contributions made by individuals earning over $145,000 to be directed into after-tax Roth accounts, was originally planned to start in 2024. However, the implementation has now been postponed till 2026, allowing savers who are near retirement and earning over $145,000 2 additional years to make up them catch-up contributions on a pre-tax basis.
Oh boy, what a mess that was. I had no idea.
Yeah.
Well, we'll also see if they push this back again, because like you said, the implementation is the problem, and you've got to give companies and plan providers time to get all this set up.
You're exactly right.
Not just a flip of the switch. So if they do make changes again, Brian and I are going to be on top of these changes as they happen. So like I said earlier, make sure you subscribe, hit that like button. Brian and I put out videos on the daily that help you make the best decisions for your financial future. And we also keep you updated on any changes from the IRS or regulations that come through. So also, here's the thing. Yes, we do. If you want to know more about the new 1099K changes, we're going to drop a video, like it's more in depth. Go check that video out we did on it. The link's going to be in the description.
Definitely.
All right, Brian, this has been informative. Thank you so much. And as always, thanks to everyone who watched.
Thanks, everyone. Have a great day.